Corporate tax exemption for public pension and social security funds, application and approval process. Public pension funds and social security funds play a pivotal role in the financial security and welfare of citizens and residents by providing essential retirement benefits, social security, and related support services. While these funds often operate under the auspices of federal or local government entities, they maintain a distinct structure and purpose, focusing on serving the needs of their beneficiaries. This unique status has implications for their corporate tax treatment and eligibility for tax exemptions. Governance and ownership structure of public pension and social security funds. Public pension and social security funds are typically established, sponsored, and regulated by a government entity at either the federal or local level. This governmental oversight ensures the appropriate management, regulation, and security of the funds. However, despite their close ties to governmental bodies, these funds poses a distinctive characteristic that separates them from other government-controlled entities. Beneficiary-centric structure. Unlike many other entities fully owned and controlled by government bodies, public pension and social security funds are structured to prioritize the interests and rights of their beneficiaries. This means that the legal entitlement to receive benefits, as well as any surplus assets accumulated within the fund, belongs to the beneficiaries. The government entity's role, in this context, is primarily to oversee, manage, and ensure the integrity and intended purpose of the fund rather than to exert direct ownership or control over its assets and activities. Limited government control. Due to this unique governance arrangement, public pension and social security funds are not typically classified as wholly owned and controlled by their sponsoring government entity. This distinction acknowledges their purpose-driven focus on safeguarding the rights and benefits of the individuals who contribute to and depend upon the fund. Corporate tax exemption eligibility and application process. Given the essential public function and societal importance of public pension and social security funds, the UAE's corporate tax framework recognizes their special status and offers them the opportunity to apply for an exemption from corporate tax. To obtain this exemption, eligible funds must engage with the Federal Tax Authority, FTA, through a formal application process, demonstrating their compliance with specific criteria. Steps to apply for corporate tax exemption. 1. Submission of application. Public pension and social security funds seeking exemption must submit a detailed application to the FTA. This application serves to provide the necessary documentation and evidence supporting the fund's eligibility for exemption from corporate tax. 2. Demonstration of compliance. As part of the application process, the fund must demonstrate that it meets the regulatory and operational requirements outlined by relevant legislation and regulations governing corporate tax exemptions. This may involve providing documentation related to sponsorship and governance structure. Evidence that the fund is initiated, sponsored, and governed by a federal or local government entity, confirming its legitimacy and alignment with public welfare objectives. Beneficiary rights. Details regarding the rights and entitlements of beneficiaries to receive benefits from the fund, illustrating that the assets and surplus are used solely to fulfill the fund's intended purpose. Adherence to regulatory standards. Proof that the fund operates under appropriate regulatory oversight to safeguard its activities and ensure compliance with all applicable laws and regulations. 3. FTA review and approval. Upon receiving the application, the FTA will undertake a comprehensive review to verify the accuracy and completeness of the information provided. If satisfied that the fund meets all established criteria, the FTA will grant the exemption, thereby exempting the public pension or social security fund from corporate tax obligations. Importance of exemption for public pension and social security funds. The decision to exempt public pension and social security funds from corporate tax is grounded in the recognition of their critical role in the economic and social fabric of the UAE. These funds provide essential retirement benefits, social support, and financial security to their beneficiaries, contributing to the overall well-being and stability of society. By exempting them from corporate tax, the UAE government enables these funds to maximize the resources available for their intended purposes, ensuring continued support and financial protection for their members. Ongoing compliance obligations. While public pension and social security funds may be exempt from corporate tax upon approval by the FTA, they remain subject to ongoing compliance obligations to maintain their exempt status. This includes adhering to any conditions set forth by the FTA and providing relevant documentation upon request to verify continued compliance with all regulatory and legal requirements.